What's the best way to simulate an options trade like VIXM or VXZ? Tricky. Since VIXM and VXZ have low trading volume, what would be a good underlying asset to use? So the problem isn't the trading volume. A lot of people are scared to trade either the VIXM directly or trade options on it because they see the volume is low. But you got to remember that there's two things happening here, and I will answer your question. Make sure I'll circle back to it. But the first thing is that volume doesn't quite mean the same thing in volatility ETP space as it does in regular stock trading. I've personally never had an issue with any trading volume on products like that. So yes, you could say, oh, there's only 80 million assets under management or 50 million under management. It actually turns out that you can still get efficient fills. With the options, it's kind of the same thing. You might think, wow, the bid-ask spread looks so wide. But in a practical sense, when you're in there trading, it's not so bad. The second thing you have to always remember is with a product like the ones you're talking about, the volume numbers that you're looking at are typically averages over a long term. When is the volume the highest on these products? It's when you would want to be buying them. Certainly in the VTS community, we don't buy the VIXM, which is a long volatility ETP, M4 to M7 for anybody who's wondering. We don't buy that when volatility is super low and we're trying to anticipate some type of volatility spike. We're not contrarians in that sense. We're trend followers. So we're not going to touch those products when everything's calm and the volume's lower at those times. But when I start wanting to get into those products and when the general public starts actually ramping up the volume, that's when we're going to be getting into it as well. I say all that to just say, don't worry so much about the volume. Keep track of your fill prices. Make sure you're not just getting totally robbed every time you do it, but it shouldn't be an issue. The reason I say it's not a volume problem, there is an issue here. If you're trying to simulate a VIXM trade with options, the problem is Vega is going to be very high when you're trying to enter that trade. Like I said, you're not going to be a contrarian buying it when vol's super low. You're going to be buying into a headwind already. And so what you can have happen is, as we know, if the market settles and news event comes out and everybody calms down, those products can get hit pretty hard the next day. And then if you're simulating it with options, you can get another secondary hit that you bought an option contract while volatility was rising. You paid more than normal, and that can get hit as well. So that's the biggest problem. Typically, when you're trying to simulate these with options, you could do some type of risk reversal. You could do a vertical spread. You want to do something that's not completely long Vega. You don't just want to buy a call option on VIXM and think, well, I'm simulating the product. No. If there's a reversal, which happens about 80% of the time, if you jump in there with a long call, you can get hit pretty hard pretty quickly. So I would say that make sure that you're really managing your Vega exposure to whatever you're trying to simulate when you jump into this. Stock replacement works fantastic for stock replacement long put options on VXX, works great for simulating SPY or the NASDAQ. It gets a little bit tricky when you're talking about long Vega trades on a long vol product purchased when volatility has already spiked. The losses can pile up. Just be aware. Try to manage that. Try to get longs and shorts in the same trade structure, and you should be far better off.